What's going on, guys? Tony Ivanov here, lead trader of TradeBuddy, and today we're doing a cryptocurrency video. We're going to talk about the big three cryptocurrencies: Bitcoin, Litecoin, and Ethereum. And I'm going to talk about their daily charts, their weekly charts, and their hourly charts, and just seeing which way this is likely going to go, looking at some chart patterns and trying to see if we can do a potential swing play on Bitcoin and the other two big currencies. So if you want to find out if you can trade Bitcoin, if you want to see where this can go in the near future, stick around for this whole video because I'm going to break it down completely using my years of technical analysis experience. So just let me clarify first, this is not going to be covering altcoins. This is not going to be covering day trading on Binance. The market is a lot different now than it was back in December and January. You really cannot argue with me that the price action that we saw on all cryptocurrencies in January and December was not a bubble. It clearly was a bubble. There's many signs that it was a bubble. Here we're looking at the Bitcoin chart on tradingview.com. They have some awesome free charts. You can click the link down below to check it out. And I'm using the logarithmic scale on this. So if we go to the settings tool, you have to make sure that you check log scale. Over time, just doing my research and technical analysis, I have found that the logarithmic scale works a lot better on these cryptocurrencies when you're drawing your trend lines and stuff like that. It seems like it's a lot more accurate. So we have the log scale checked, and you can see that on Bitcoin, we've had this downtrending trend line for a pretty long time here. All you do is you get your ray tool on TradingView. It's over here on the left hand side. You get your ray tool and you put dots at the highest it's ever been and the next lower high, and that creates a downtrending trend line. And you can see it has tested that trend line 3 times, even 4 times. So boom, hit it here, pulled back, bounced up, made a lower high, hit that trend line, and now the trend is formed. We pulled back heavily here, bounced up, look where it stopped. It's not a coincidence. It stopped there because there is previous resistance at that level, mainly because of this trend line. We pulled back. You can see we bounced off of this horizontal previous resistance, which is now support, where it bounced off there as support, pulled back, it did a double bottom here, spiked back up, hit that trend line, and you can see it had a small little pullback, but whole bunch of buyers came in and they broke through the trend line. Now the trend is broken. So now the question is, where is this gonna bounce and pull back to? Because if we can have this do a pullback and make a higher low off of this dip here, that would be a very good entry and a very good place to have your position made in Bitcoin as a swing. This is not for day trading. This is for long-term holding, probably 1 to maybe 3 months of holding Bitcoin. So essentially what I'm looking for on this play is having this price do a pullback, because it's going to have to pull back at some point. It's been running up for the past 2 weeks now. So it's going to have to do a dip soon, and we have to see, okay, is this going to make a higher low? Because if it does, that's very bullish, and that's having the trend reverse, because all this time we've been making lower lows, lower lows, lower lows, lower lows. We break the trend line and do a higher low. That's a complete switch, a complete 180 of the trend. So I'm going to be buying into that and riding it on up, adding into the dips and selling into the spikes, just working the play. Same thing's happening on like Litecoin and on Ethereum too. So we'll look at Ethereum first. Now Ethereum had the same type of pullback after the huge Bitcoin mania that happened, this bubble that happened in December and January. After the top burst, everything pulled back. We'll look back at Bitcoin. It hit a high of 19,000. Just 2 months later, hit a low of 7,000 or 6,000. Tell me that that's not like a bubble where it just gets extreme exponential growth and then it just blows off the top. Everyone sells and panics. That's exactly what happened. But now we're looking, okay, what's the next wave of cryptocurrencies, because we had the first bubble. Is it done for completely? Maybe, maybe not. We have to see how people react. One thing that I'm really worried in specific with cryptocurrencies is all the regulations, especially in the US. Now, if you're not in the US, this isn't as big of an issue to you, but in the US, and this is one of the reasons why I'm not day trading cryptocurrency right now, is because how they have the tax laws placed. With every single transaction that you do in crypto, you have to pay taxes on the transactions themselves, not the capital gains at the end of the year. Every single transaction, when you buy and when you sell, it's a taxable event, so you have to pay taxes on it. And because of this, it really makes day trading crypto almost unprofitable, mainly because when you trade, you have to make sure that however much you make, one, you cover the commissions from the broker, and now two, you cover the tax. And a lot of people are not factoring that in with their trading because frankly they're uneducated. A lot of people in the US do not know about this rule, and come next year it can really hurt them because the IRS is going to be able to know how much you made, just because when you cash out, you use Coinbase, and Coinbase is regulated by the IRS. They know exactly who is buying and who is selling, and they're going to be able to know if you're day trading because say you put in $5,000, next year you take out 100,000. They're like, okay, how'd you make that 100 grand? It wasn't through holding Bitcoin because it did not go up that much. You had to day trade, and through that they can make you have to prove all of your tax filings and stuff like that. So it can get very complicated. If you really want to day trade crypto, I highly recommend that you talk to a tax person who knows about it, because it can be very, very, very risky to do so. But when you swing trade, it's not as bad doing so, because you don't have so many transactions. You're buying, holding for months, and then just selling in one big transaction. So doing that is safe, and that's why now, after these massive pullbacks we had, I'm looking at buying back into crypto. Now on Ethereum, I missed out on this dip. It had a very, very, very nice dip down to 390, which, no coincidence, was the previous resistance after the big run we had in December. So you can see here in June, it hit that level, pulled back, hit it once again in September, pulled back, hit it one more time in November, broke out, and then continued on. You see, made a higher low. So same exact thing that we saw in Bitcoin. One thing you want to see after you break a huge resistance is you want to see a higher low off of that previous resistance, because the number one thing in technical analysis is previous resistance becomes support. So this line at 399.400 was previous resistance. It hit it 3 times. Finally, it was able to break out. There were more buyers and sellers at that point. Finally broke out, and then you can see once it pulled back, it never went back below that level. That previous resistance became support. Shot all the way up to 1600, pulled back, and look at where it bounced. Right on that $390, $400 level. Now it bounced off of that. Now it's at 668, which is almost 100% gain. No, exactly 100% gain on your money. Or no, like 80% gain. And that happened within 2.5 weeks. So missed that play, but we do have an upcoming resistance on Ethereum. This level at 714. And you can see we also have that same descending trend line that we've broken through. So now we need to see, okay, once this pulls back, which it's going to do soon, once it hits this level, most likely, it's going to pull back, and we have to see, okay, where is this going to make a higher low? And if it does make a higher low, it would probably be a safe bet to buy into that higher low dip and sell on the way up, managing your position along the way. And then, so, of course, same thing with Litecoin. Most of these larger cryptocurrencies, they usually move in unison. So whenever they all spike, or whenever one spikes, they all spike. Whenever one crashes, they all crash. And they have kind of the same chart patterns too. It's not exactly the same, but it's pretty similar. So last but not least, here is Litecoin. One thing I don't like about the logarithmic charts on TradingView is that here in specific on Litecoin, it has this one day where it had a bad print, and it makes the chart really, really, really stretch because it's trying to accommodate that day. But that's okay. Just one small error. It's a great platform. It's free, so you can't really complain, you know. So on Litecoin, once I was doing my technical analysis, there's one main thing I noticed, that we kind of have this gigantic bull flag forming on the daily chart. Now, if you're not an experienced trader, you will not notice it, but if I switch this over to the weekly chart, which means that one candlestick is one whole week of price action, because right now, one candle is 1 day's worth. So if we switch it to the 1 week time frame, where now one candle is an entire week's worth of the price action, now kind of looks like we're making this bull flag here on the weekly chart. You can see we had this huge explosion last year in March where we just exploded from the $3 level, hit a high of 69 in this big arc, and we held support there. We blasted even higher. Now we have this bull flag here, and we're holding support once again off of this previous resistance. So let me just clean up this chart so it's easier to see. So there we go. You can see, let me just draw the bull flag for you guys if you don't know exactly what it is. So here's the flagpole, and then the flag kind of doing something like that where it's squeezing into this falling wedge. Now what we need to see on Litecoin on the weekly chart is it going to break out and is it going to go higher? Once we pass the 160 level, that's pretty much confirmation that the trend is reversed. Now, the reason why I say that is because if we look at this top here, after we had the big spike, we pulled back all the way down to $100 exactly. We had a higher low or a lower high spike. Sorry, it gets kind of confusing. Lower high spike that went up to a high of, actually I'm wrong, that was the wrong price. High of 251. If we can eventually break back through 251, that is a pretty good indication that we're going to retest the ultimate highs in the 400s. Now, I'm not saying that you have to wait all the way until you buy at this breakout, but that's the overall confirmation of, okay, we have stopped this bull flag and now we're breaking through the levels of resistance. Now, as far as an entry on Litecoin, you could probably just look to see, is the same trend line the same exact thing as Bitcoin? Are we gonna make a higher low after we break out of this trend line? If we do, you can start buying in. And then one thing I really want to stress is that with these trades, you have to be very, very, very patient, because it is going to take a long time. When you trade these bigger coins, they do move slowly, but they can have big moves in the span of just a few months. And the best thing about it is, once you have the perfect entry point and you have a nicely sized trade on this, it's basically passive income. You buy into the lows, you hold it for 2, 3, 4 months, and if your technical analysis was right and if your plan was right, then you should have made some nice bank within 2 or 3 months, maybe 20, 30, 40, 50, maybe 100%. Who knows? You never know. These have had histories of huge runs, so there's no reason why they cannot do it again. Now, of course, one thing that does happen often in the trading world is that when the mob, the traders, want something to happen, typically the opposite happens. Now, what I mean by that is, like, if all the traders want this to break out and go to new highs, well, usually they're kind of worried about it happening, and they're more likely to sell once it doesn't reach those highs, meaning they become the resistance. They become the resistance, and they become the ones to hold it down. I know it kind of doesn't make sense, especially if you're a new trader. However, if you have been in my chat room and you've watched me trade live, you probably understand what I mean by this, where people who expect something to happen, they're more likely to cut their losses once their plan fails immediately, meaning that they will become the levels of resistance in the spike and ultimately hold it down. Because at the end of the day, with anything that's traded, stocks, options, crypto, futures, forex, anything, the price action is determined by the buyers and sellers. If there's more buyers than sellers, the price is going to raise up. If there's more sellers than buyers, the price is going to drop. These prices are only determined by buyers and sellers. There's no indicator that predicts price. There's no moving average. Those all follow price action and volume and help you identify levels of support and resistance. But they're not what actually makes the price move. At the end of the day, with all these plays, we need big volume, meaning that we need new hype, renewed hype into the crypto market. Because you can see back here in December and July, just looking here at the daily chart, down here's the volume levels. You can see during the spike, we had immense volume, crazy trading volume. Now you can see it's not that much. We don't have nearly as much volume as before. So we need to see that renewed excitement about Bitcoin and the crypto market in general. If we don't have that, ultimately we won't have the volume that we need, and ultimately these cryptos could probably just, you know, bounce and slowly end up down to their original levels, down in the single digits. So end of the day, look for volume. If there's an immense amount of buying volume during a big breakout, that's a good indicator that other traders are on the same boat. They're all buying at that point, pushing the price up. So watch the volume, watch these trend lines, make sure that you do your own research as well, and hope you guys enjoyed this content. So if you stuck through this whole video, I'm assuming that you enjoyed this content. If you did, leave a like, leave a subscription, leave a comment down below with any questions you have. Make sure you follow me on Facebook, on Instagram, on Twitter. I have a free group on Facebook called the Trade Buddy Community. There's a link down below that you can join it. We have crypto traders, day traders, options, forex, everything. Over 5,000 members in there now who share their best practices and tips and tricks on what to trade and how to trade. So if you want to join that community, click the link down below and answer the simple questions in there, and I'll accept you. So thank you all so much. Hope you guys enjoyed this crypto video, and I'll see you guys tomorrow.